good afternoon traders all around the world. This is FXPassion broadcasting you live on YouTube. This is Forex Trading Course 101. And remember the three pillars: strategy system, number 1, risk management, number 2, and psychology, number 3. Remember everybody, I have a 20 seconds delay between in the chat. Also, we are in the beginner module. We are learning how to trade trends, trend lines, support, resistance, pivot points, candlestick formations. Our basic module is over. Hello George, how are you? Also remember that 90% of traders lose money in the Forex market worldwide. Hello Annie. And risk disclaimer, the webinars are not investment or trading advice. The webinars are for educational purposes only. And don't trade with money you cannot afford to lose, everybody. That being said, let's dive into the live markets, and we are going to open EuroCAD daily chart. So the title for today is how to trade support in a downtrend. Okay. Now before we start, in the basic module we learned about structure. Let's make this like this. Okay. And we learned about the rules of the wave, right? The extensions. Then we learned about the retracements, and we learned about the extensions. And we learned about the short-term trend, right? We learned about the trend lines, we learned about the counter trend lines. So if this is your first time, everybody, if you have difficulties to understand what we are teaching you now, right now, today and this month, you should look to understand and learn from the past videos. Okay? Now, for the one who are studying and you understand and you learn, we are trying to teach you now how to trade in here in between, how to trade in here in between, how to trade in here in between. So we are trying to upgrade your knowledge. Okay? Now, if this is your first time and you need to see and to understand and to watch the webinars, okay, just go on the webpage, Stohastic webinars. Okay, you go to the Stohastic webinar page, and just a second, and you go to playlist, Stohastic webinars playlist. You click on the playlist and you are going to find Forex course 101 FXPassion. Okay, you have 23 videos so far where you can learn starting from the number 1. Okay, now that being said, let's address how to trade support in a downtrend. This technique, everybody, it's one of the difficult ones. Okay, it's not understood by the many, and it's not used by the many. So I'm telling you this right now, because if you are not going to quite understand why and how and everything, okay, don't use it. Go with what you understand, go with what you are comfortable with, okay? But you need to learn this, you need to learn, you need to understand, because if a losing trade is going to occur, and it is going to occur, at least you need to understand why it happened, how it happened. You know, you need to understand, maybe I entered in a wrong place at the wrong time. Okay, so we're going to delete this and delete that. Now, yesterday it was easy, right? How to trade support in an uptrend, right? Past support, we found levels of past support where the past support connected in a way, more or less, right? So let's make it like this, like that. Okay, now how to trade support in a downtrend, right? How to trade support in a downtrend. And we are talking about this piece of information in here. What is this, everybody? This information, and this information. This quadrant is the representation of what we are going to talk about today. So background color, okay, let's make it blue. So we are going to start to talk slowly about retracement trades. Okay, now you can see retracements inside structure, and you can see retracement inside the trends. Okay, before we move further, question for you, everybody. If this is structure, okay, let's make it black. If black is structure, and inside this structure you are going to have the short-term trends, right? The short-term trends. You are going to have the short-term downtrend, you are going to have the short-term uptrend, right? When you are going to trade retracements, okay, when you are going to trade this, where is the best or where is the highest probability of success? So let's say that you want to trade a retracement, right? Okay, extension is over, you have a counter trendline break on the extension, right? This is new knowledge. We learned that we have counter trendline breaks on retracements. Well, starting from today, new knowledge for you, we have counter trendline breaks also on extensions, right? As George says many times, oh man, but this is the daily chart, does this mean that we are going to wait for 3 months or 6 months or 5 years? Well, not anymore, John. Not anymore, George. This is one of those lessons. We are moving on. Okay, so we have a counter trendline break on the extension. The extension is over, and the retracement starts. Okay, so the question number one is for you: if you are to try to trade retracements in the short-term trend, where you are going to have the higher probability of success, trading the structural extension or trading the structural retracement or trading the structural extension? What do you think? For a downtrend structure, the trend lines are resistance lines, not. For a downtrend structure, the trend lines are resistance lines, not with support lines. George, I'm sorry, my friend, I don't understand your question, because this is the trend line. Let's color code this in. Can you rephrase your question, George? Let's say the black is structure, it's a down structure, and you have the violet down trend line. So this violet trend line is resistance line, not support. And Victor says retracement, Annie says extension. Annie, the correct answer is retracement. Okay, when you are going to trade the retracement, you are going to have a higher chance of success entering, buying retracements in here. Why is that? Simply because of the direction of the structure. Okay, structure is retracing. Okay, and inside in here, maybe you cannot see it right now because you are going to have up and down, up and down, up and down, right? It seems like an uptrend here, but you have a downtrend here, right? Agreed? Yes or no, everybody? I mean, the black trend lines must be above the red. The black trend lines must be above the red, not below. Here? Oh, this is the downtrend. Do you mean like this, the pink line? Okay, let's go step by step, everybody, step by step. Let's go. Let's step a further back. Okay, in an uptrend that everybody, it's easy to spot, right? In an uptrend, we said that we have an uptrend line, right? And we said the best entry points are when the retracement is over, right? Nothing so difficult. And we said, well, one of the technique is to put a counter trend line, right? And we are going to enter in here. And we said, well, the downtrend is going to be the same, just in the opposite direction. And we are going to have a downtrend line, and then we are going to have the counter trend line breaks, right? And we are going to enter selling, right? We are going to enter selling the market when the market breaks the counter trend line, right? So this is nothing difficult, nothing special, nothing, this is easy to understand, right? Okay, now this is one story, everybody. This is one story. Now we are addressing how to trade this information in here. Okay, try to understand, everybody. This is now something different. Okay, it's all fruit, but we are not talking about the apple anymore. We are talking about the strawberry, right? And strawberry, yes, it's a fruit, but it's not the same. Apple, it's not as the strawberry. It has different taste, different properties, different vitamins, right? So you need to upgrade, everybody. Try to understand, we are talking about something different right now. Okay? As yesterday, George was asking, well, what about the stop loss on structure? Yes, nothing changed. I'm not telling that this knowledge, everybody, is still the same, still. But we are trying to move on with you. Okay? And again, you know, if you don't understand, go watch again over and over and over the past lessons. Okay? This is not, right? It's not that easy. You need to open your mind, everybody. This is now a different story. Okay? Now, I just draw a counter trend line, the black line, on the end of the extension. Okay? So you could be thinking, oh no, but you said, yes, but this was before. This is one story. This is one concept. This is one trading style. This is one strategy. Now, today we are trying to learn a different story, a different strategy, different approach. Okay, everybody, are we clear on that? This is a new approach, new story, new technique. Okay? And we are starting from the point that we don't want to short the market. We don't want to short the downtrend. We want to buy. We want to go long. We want to make money in here. This is what is our interest today. Okay? So when you are turning from a beginner to a semi-professional, right? Maybe you are not going to trade this, but at least you need to know how this works, right? What is the good point? What is the bad point? Where the technical risk is going to increase? Where the technical risk is going to decrease? Okay? So, we want to trade the retracement and try to understand, everybody, this red downtrend the red. This could be structure or on any time frame, or this could be a short-term downtrend on any time frame. This could be the red line, the 15-minute chart, the 5-minute chart, the 1-hour structure, the 4-hour downtrend. This could be anything. But the concept how we are going to trade, and we are going to use support in a downtrend to trade this. Okay? So we are going to trade a counter trend. Okay? Our trend is down. We have lower lows, lower highs, lower lows, lower highs, but our counter trend is up, right? And the representation of the counter trend is retracement, trend, extension. Counter trend, retracement, trend, extension. Okay? As I'm telling you, you don't need to use this technique, right? This technique, it's not quite understood. Not many traders use this. Okay? But at least you are going to know how it works. Okay? So, when you are going to trade the counter trend, right? The question was where you are going to have the greater success, right? When the structure is up or structure is down, right? And spatially you are going to say, well, the extension, because you are thinking, well, this red line is this red line. Seems the obvious, right? Seems obvious, right? How can I win here, Passion? Because the trend is up, right? How can I win here? The trend is up. Well, the higher time frame controls the smaller time frame, and you have a down structure, right? And the down structure is in the process of making the retracement. So if this is difficult to understand, think about direction, right? Think about direction. In a short-term trend, you want to go up, right? Yes? Now, where in here you are going to go up? Structure is moving up in here, right? Structure is not moving up in here. The extension is down and another extension is down. So structure is moving up in here, and your short-term trend, is moving up in here. So even it looks like that you are not going to have the higher chance in here because of the structure. And structure is, what did we learn yesterday? Short-term trends on the higher time frames are structures on the smaller time frames, right? So you are going to have this also in here. Okay? I know it's difficult to understand because visually, spatially it contradicts itself, right? But remember the direction. Okay? Now let's move forward, everybody. It's going to be clearer. Okay? So let's delete. Now we are here. Okay? And we learned that past support are highs, right? Now before we are entering the counter trend, okay, we are going to look for past support. Now before doing this, we need another piece of information. Downtrends, I need some space. Okay, now downtrends form from uptrends, and uptrends form from downtrends, and this story continues until the end of the decades and years, right? Where did we see this, everybody? Remember? Downtrends form from uptrends, down structure, Down structures forms from up structure. Do we agree on this, everybody? That one trend is forming from another in the Forex market? It doesn't stop, it's 24 hours a day. It stops only for a day and a half. When New York closes on Friday and it opens with Australia, Japan. Do we agree with that, on this concept that one trade is forming from another? You can say yes, you can say no, you can say I don't know, you can say I'm not sure. Monthly bias, yes sir, correct. Okay, so in the short-term trend, you need to look when you are going to use support in a downtrend. We are going to check further back in time. Okay, further back in time. So when we want to enter, or we are going to anticipate the 2-hour chart and the 1-hour chart, it's not a problem because changes in trends or the swings or the extensions and retracements are quicker, right? You don't need to wait for 6 months for a change. But George said in the beginning, a few lessons ago, oh man, are you suggesting for us to wait for 6 months? And I said, well, yes. As a beginner trader at that point, the answer is yes. Now, the answer is not anymore, my friend. You can go trading if you want the retracements. And this is how it's done, everybody. Okay? So, when you're going to check, when you're going to want to trade the retracement, you are going to check the past support from the previous uptrend. And what you are going to find, everybody, is that where and when the market ended the extension in a downtrend, okay, when the market ended the extension in a downtrend and start the retracement, 9 times out of 10 it happened when the market hit, guess what? Past support from the uptrend. Okay? Sometime, and again, as yesterday, this is theory, and we know that from yesterday, sometimes the market is going to connect, sometimes the market is going to break, is going to go through and react, and sometimes the market is not going even touch the support, right? Okay? Something like this. But for sure this is the example here. For sure it touched maybe something else in the previous structure from what else? 20 years ago or something, okay? Maybe this example in here, well, it reversed, the extension is over, it didn't touch this one, but maybe it touched something in here, right? Connect with some other previous past support from 10 years ago, 5 years ago, okay? Now this is theory, so what we are trying to understand before we are going to start trading retracements, we are going to try to find past support, okay, in our downtrend. Okay, maybe my English is not perfect, but I hope you understand. We are trading the downtrend and we are going to trade the retracements in a downtrend, and in order to have a higher chance of success when trading retracements in a downtrend, we are going to use as a technique past support from the previous uptrend. Any questions so far? And again, if you don't understand, it's difficult, just patiently see, okay? We are going to pass you this knowledge. You don't need to use it. You can reject it, no problem. Okay? The question is, do you have any questions, everybody? Do you understand what we are trying to do? I'm trying not to yes, I'm trying not to complicate too much. Okay? So one thing that is going to help us is the counter trend line on the extension, and together with this is going to be a level of past support from the previous uptrend. So any questions so far? No questions. Okay, great. Question for you, everybody. With all the knowledge that you have, of structures on every time frame, on every currency pair, with all the knowledge that you have about short-term trends in all the currency pairs and all time frames, right? You have all this knowledge already. Tell me which one is going to have a greater chance of success. I'm talking about pure probability. It's better to trade extensions in a downtrend, or it's better, and when I say better, it's high probability, or it's better to trade retracements in a downtrend. Let's clarify this first. For the beginner trader, the question is, it's better, and when I say better, it's high probability to trade extensions in a downtrend, or it's better, high probability to trade retracements. What do you think? What do you think, everybody? George, I'm going to answer to you in just a second. I just want to hear this one first. When we talk about probability, what have the better, the higher chance of success? Trading extensions in a downtrend or trading retracements in a downtrend? You can say extension, you can say retracement, right? You can say I don't know, you can say both. You can say, oh, passion, this is too difficult, man, to understand. I feel more confident to trade a retracement, but most of the times I'm greedy and stay too long, so I usually, looking through the past, I think the retracement. I will prefer to trade end of retracement. So, talking about greater chance of success, yes, the answer is in a downtrend. Man, I need more space. In a downtrend, okay, the bigger probability of success is going to have the extension. So the end of the retracement, right? The end of the retracement, those trades in here are going to have the greater chance of success. Okay? Going with the trend, going with the structure, the same direction. Okay, so we are clear on that. Now, does this mean that you can't or shouldn't trade the retracement? Well, absolutely no. Absolutely no. But ask any professional trader when he needs to choose between to enter an extension trade or to enter a retracement trade. He is going to choose the extension trade. Why is that? Well, we are in a downtrend, right? Go with the trend. Talking about probability, right? Of course, if the risk reward is the same or better, right? But risk reward is another story for another webinar. Okay? Just why I'm asking you this, I need you to understand that we are upgrading your knowledge. Not just because you are going to learn how to trade the retracements, you are going to stop trading the extensions. No sir. But when the time comes and you don't have any extension trade that you can enter, then you can look for a retracement trade. Okay everybody, are we clear on that? Okay, I'm going to write this down. This is so important. Let's wait for the software. Come on, software. Oh, there you go. Okay, how can we structure this sentence? Independently of how much you know and how much you learn, or how much experience you have, always start from the probability of success perspective. Okay, independently of how much, I hope my English is correct, independently of how much you know and how much you learn, or how much experience you have, always start from the probability of success perspective. Okay, because it's going to be one point in time when you are going to learn all this stuff, you know, the multiple time frame trading, and we are going to draw the Fibonacci's, and you are going to have the multiple time frame Fibonacci's and the Fibonacci of the confirmation, you know, all of this, counter trend line, trend lines, counter trend trades and everything. Always start from the perspective of the probability of success. Okay, if you don't understand this, you are done everybody. Okay, if you don't understand and if you don't obey this, you are done as a trader. Okay, why is that we have 7 years traders, 8-year traders, 20-year traders? Why? Because we like to learn, right? And I just read the book everybody, and the author in the book is showing how to earn money with Ichimoku. So I'm going to draw Ichimoku and I'm going to enter Ichimoku trades. And in 2 days I'm going to attend a seminar with of the JP Morgan Chase super robot, and I'm going to buy this super robot. And no. Learn as much as you want, this is okay. But before you enter a trade, here, do you like this everybody? Do you like this chart? Before you enter a trade, in here, do you like this chart everybody? Before you enter a trade in here, right, and you have the Fibonacci's and structures and what SMA, MMA, dual moving average crossover, original Fibonacci, contrarian Fibonacci, you have pivot points, resistance, support, and you have the MACD and 2 stochastics. You need to start and you need to obey, you need to enter from the perspective of the probability of success. Okay? I don't like your chart, okay? Me neither, believe me. I don't like it either. It's a mess, okay? No problem. Are we clear, everybody? Just because you are learning a new technique, okay, just because you are learning this today, it doesn't mean that this is better, that this is more important, or that you should trade just this and forget what did you learn before. No sir, no ma'am. Too busy for me. Yes it is. Yes it is. Okay? Sometimes simplicity is better. Okay? But one of the rules as a trader, you need to be clear, everybody. Let's say that you work for me, okay? You work for me, I'm your boss, and you are going to enter a counter trend trade. Okay? My first question is, why did you enter in here and you didn't enter in the extension? Okay? This is going to be my first question. And you are going to say, well, you said that we can trade everything we want, right? And I said, yes, but extension trades in the direction of the trend line and in the direction of the trend are high probability, they have a greater probability of success than the retracement trades. So if you can choose to trade an extension in one currency pair and trade a retracement on the other currency pair, if you are going to choose the retracement trade, I'm going to ask you why. Okay? You need to be clear on that, everybody. Okay, let's move on the chart, right? So let's compare. I'm going to open a new one. EuroCAD daily chart. EuroCAD daily chart. Okay, we are here. We are here. We don't have the crystal ball, right? Let me see. We are here. Where are we? Structure. Okay, let's say that we are here. Okay, we are here and we are seeing, right? We don't have the crystal ball. We are here. Okay, now we don't have the crystal ball, so we are going to wait. Number one is going to happen, the uptrend line break. This is going to happen. Number one, we learned so far that downtrends are formed from uptrends, uptrends are formed from downtrends. We learned that up structure is formed from a down structure. We learned that a down structure is formed from the up structure. So this is what we are seeing, right? And we are going to wait, and finally here we are going to start to see a downtrend, right? Extension, retracement, extension. Okay? Now, remember what we are trying to do. We are trying to enter in here. We are trying to buy the retracement. Okay, this is what we are trying to do. Passion, but why is that? Well, it depends on the time frame. As George said a lot of times, those are weeks, right? And the retracement is going to happen, and by rule it must happen. It's a must. The market cannot wave other ways. When this is going to happen, this is going to take, we don't know, right? 5 days, 6 days, 2 weeks. Okay, so we want to go long in the downtrend. We want to make a counter trend trade. Okay, now what do we need? Well, we are going to check the previous levels of support, right? So And what is support? Support is a high. So here is support, here is support, here is support, right? Here is support. Where is it? The next one. Here is support, right? Another level support here. Another level of past support is in here. Another level of past support is in here, right? So let me see. Okay, just this for now. And let me see, we are okay, we are here. Okay, now we are going to trade starting from here. We have a confirmed downtrend short term. The market broke our uptrend line, so I'm going to delete this. It's not valid anymore. And what I'm going to do, I'm going to draw a counter trend line on my extension. Okay, this is going to be the number one I want to see. Okay, and now I can expect that the market is going to stop the first extension and maybe make a retracement in here, right? Because this is past support, but we are not talking about the uptrend anymore. We are talking about the downtrend right now. However, I don't have the counter trend line break on my extension, so I'm staying out of this one. And I'm just going to monitor the market. So I'm staying out, right? I'm going to compress. I'm going to extend my counter trend line. Okay, now maybe here we have another low, right? Here. And remember everybody, we are in a downtrend. Downtrend. The market is making lower lows, lower highs. Lower lows, lower highs, right? But here we have a low. And this low is near a level of past support, right? So maybe the extension, I don't know. I'm expecting the extension in some point in time. The extension must be over, right? So I'm going to wait, monitor the market, monitor the market, monitor the market, and here. Not the perfect example, but you can see everybody that the market is making what? Maybe one high, low, higher high. Okay, this is the live market. It's not the perfect example, but still I have a high, nothing else, right? So I'm going to monitor this one. Okay, so I'm staying out. I'm not entering in here. I don't have the counter trendline break on my extension, so I'm still staying out and I'm waiting. Okay, I'm going to extend, right? But I can see that this was a retracement already, right? So the market made an extension, it made a retracement, but it didn't give me a clear signal. Passion, we could enter here, man. Right? We could enter here. Yeah, but well, yes, you could, but I want to be. Remember, everybody, counter trend trades are risky. So you have aggressive traders entering here, but because this is risky, I want to see what the market is going to show me. So if I'm going to enter, I'm going to enter in here. If the market is not going to break here, I'm not going to enter any counter trend trades. There is no right or wrong. You can enter here, you can enter here, no problem. Okay, so let's see what is happening. But as you can see, the market reacted at past support from the previous uptrend. Okay, can you see this, everybody? So the market was extending. This was the extension leg, retracement leg, and the retracement, the short-term retracement, happened when the market hit the past support from the previous uptrend. Okay, I didn't enter in here, I wouldn't enter in here, this is risky for me. Okay, George, I'm sorry, I forgot about you. So in theory we enter at previous support level and then we exit when we hit this structure pink trend line, correct? Yes, or the structure pink, or even better, when the market breaks the counter trend line of the retracement, George. Okay, you can take your profits near the downtrend line, but you must be out when the market breaks the counter trend line. When and if you want to trade retracements. And again, if you need to choose as a trader, should you trade extensions or retracements, always trade extensions. Okay? Of course, in time you're going to develop your expertise, and I have two friends that they are very good, very skilled in counter trend trading, and they are doing just this and they are making money. They are not good at extensions, they are not good at Fibonacci's, they are good at this. Okay, but bear in mind that statistically speaking, probability wise, it's extensions has the greater chance of success. Why is that? Well, simply because extensions are bigger and longer than retracement. Is the volume information useful? No, it's not. No, it's not. Are the past support points with high volume more? No. George, I talked to one of my friends. George, you're a mathematician, right? Oh, okay, I know. From yesterday, yes, I was rude, okay, let's clarify. This is the answer, everybody. If you're a mathematician, this is what my friend said. Tell your students the market is white noise. White noise. The market is white noise. Engineer, okay, do you know what is white noise, George? Why backtesting, everybody, doesn't work more times than it does? Because you can backtest everything and anything, and the volume and and everything. The market is white noise, meaning you cannot. Okay, this means that it has no memory. Well, I'm not I'm not a mathematician, but just because I'm going to simplify for everybody, okay? You are going to do a backtest on a set of rules or a system, okay? And you are going to see that the market for the past 20 years, the market reversed or responded to this level when the Stohastic or MACD was at one level, okay? Just an example, okay? And you backtested this and you said to the conclusion, well, when this happens 9 times out of 10, the market responded in this way, okay? This is the backtest. When you are going to trade, what you are going to find is that just because in the past 20 years the market responded to this level, when the Fibonacci was like this and the MACD like this, today when you're trading, the market is not going to respect nothing that you backtested and is going to do something totally different. Okay? This is white noise. This is what one of my mathematician friends answered to me yesterday. Tell your students the market is white noise. You can backtest, okay, but most likely it's not going to work. I mean, when? Why is not? Because, well, George said this means this market has no memory. I don't know about the vocabulary, right? But just because the market responded here, in here, in here, bam. I'm going to show you a great example. AUD CAD. But you have a lot of examples. AUD CAD monthly chart. Okay, AUD CAD monthly chart. Just because this is a pivot point, everybody, and the market reacted here, right? Reacted here, okay? Just because this is the pivot point and the market from 2006 to 2019 reacted here, this doesn't mean that when next time is going to approach, it's going to react again. Okay? This is white noise. And this is why a lot of people lose a lot of money, because they bet greater volume. They are going to enter with greater volume and they are going to risk more, because you think that, oh, the market reacted here and here and here, so 99% is going to react in here. No sir, no sir, the market is white noise. Okay, you can't be sure of anything, because the market can do bam, like this. This is white noise. The market is a sum of worldwide psychological behaviors and thinking. It's mass psychology in the end. Okay, and you cannot predict, not quantify, not backtest mass psychology. Okay, everybody, 2 more minutes. Let's see what is going to happen. I want to see a counter trendline break on my extension. Extension, retracement. I have a new extension, right? Okay, so in here I can draw. This is the new extension leg. Color. Okay, extension leg, retracement leg, extension leg. So I have a new extension leg. I can draw my other trend line like this. And let's see. Let's compress the chart. Let's compress the chart. Didn't break, didn't break. Okay, it broke in here. This was my extension leg. Broke my counter trend line on the extension. I'm going to look back in time. I want to find some level of support, and as you can see, it's not the perfect example, but still the market reacted to this level of past support back in time, right? Or this level, support here, but this is the better level. Okay, do you mean that you cannot predict the future based on the past? Yes, Annie. Yes, but then this contradicts the theory of pivot points and resistance points. No, George, it does not contradict anything, my friend. I'm just telling you not to be sure. Okay, so one thing, George and everybody else, 1 more minute, okay, then I need to close because it's Rakesh coming. One thing is here, I'm not going to buy here because in the past the market reacted and reacted and reacted and reacted. This is one thing. But I'm going to enter long in here because the market reacted is another thing. Okay? It's not the same when you stay out and you don't trade. and when you trade because something happened. Okay? You cannot bet your entries because of the past, George. Okay? Engineers and mathematicians, they want to quantify, they want to make formulas, they want to predict, you know, and some do, right? You can backtest everything and anything, but if you are going to trade based on the backtesting, the market is white noise. Don't expect the same results in the future because of the results of the backtesting. Okay everybody, I need to finish the webinar. See you back tomorrow. Stay strong. Yes, we're going to talk back tomorrow. Stay strong and trade with passion. This is FXPassion signing off.